Very good morning, friends. I hope you're all safe and healthy. So, I've been carrying out a series on hedge accounting, and I've covered so far a total of 4 videos with you. The first one was dealing with the introduction to hedge accounting, then step number 1, which was identifying a hedged item, then step number 2, identifying a hedging instrument, then step number 3, establishing that the hedging relationship is qualifying. Now we come to the step number 4, and step number 4 is identifying the hedging relationship. What is the type of that qualifying hedging relationship? In simple words, we can say that we are now looking in terms of, are we supposed to apply an accounting which is called a fair value hedge, or are we going to apply the accounting for a cash flow hedge, or is it a hedge which relates to NIFO, that is net investment in foreign operation? Now let me clarify that I would be coming to step number 5 as well, and there is a distinction between step number 4 and 5. In step number 4, we are only trying to identify that what kind of hedge accounting do we apply. And finally, in step number 5, we're going to apply the accounting. So we're going to see the journal entries which we're going to pass in terms of step number 5. So let's have a look at now step number 4. How do we identify the types of qualifying hedging relationship? इंडिया का बिगेस्ट स्कॉलरशिप टेस्ट सीए के लिए अनअकैडमी पर आपको मिलेगा, जिसके लिए बच्चों को कुछ नहीं करना। आपने सिर्फ एवरी संडे टू संडे 12 बजे एक लिंक पर आपने ज्वाइन करना है। आपने उसके लिए रजिस्टर करना है और वो लिंक आपको डिस्क्रिप्शन बॉक्स में मिलेगा। और इस टेस्ट को देने के बाद यदि आपके रैंक्स आती हैं तो उनके बेसिस पर आपको खूब सारे इनाम इसके अंदर मिलते हैं। जैसे कि जो टॉप फर्स्ट 3 रैंक्स हैं उनको इंटरमीडिएट की पूरे 1 साल की प्लस सब्सक्रिप्शन स्कॉलरशिप के फॉर्म में मिलती है। जिनकी रैंक नंबर 4 से 10 आती है उन्हें एनुअल सब्सक्रिप्शन का 75% स्कॉलरशिप मिलता है। यही नहीं, जिनकी रैंक 11 to 50 आती है उन्हें 50% ऑफ द एनुअल सब्सक्रिप्शन स्कॉलरशिप मिलती है। और इसके अलावा जिनकी रैंक 151 to 200 आती है उन्हें भी 25% एनुअल सब्सक्रिप्शन का मिलता है। तो भाई इतने सारे इनाम के लिए करना कुछ नहीं है, आपने सिर्फ उस टेस्ट को अनलॉक करना है। इसके लिए मेरा कोड इस्तेमाल करना है CAKB10। तो किस बात का इंतजार है? संडे को 12 बजे आइए, लेट्स क्रैक इट। Well, as I just said, that there are basically 3 types of qualifying hedge relationship. One is called a fair value hedge, one is called a cash flow hedge, and the other is hedge of what we call NIFO, net investment in a foreign operation. Now there is an interesting chart which is going to summarize the entire inputs, that in which cases do we apply a fair value hedge, in which cases do we apply a cash flow hedge, and when do we hedge for a NIFO, and certain examples related to each of these categories. Now when you look at a fair value hedge means that you want to hedge the exposure in terms of changes in fair value. The fair value changes could relate to a recognized asset or a recognized liability, or it could be an unrecognized firm commitment. That means you've already entered into a contract, which is going to be executed in the future, but it is not yet recognized in the books of accounts. Or it could be a component of any such item. Now, when you look at certain examples of a fair value hedge, the first example is that there is a forecast purchase of an equity instrument that once acquired. That means I'm not yet acquired the instrument, but I'm planning to acquire an equity instrument in the future. So you can say it's like an unrecognized firm commitment. Once I'm going to acquire this equity instrument, that equity instrument is going to be accounted either at a fair value through OCI or a fair value through profit and loss account. So basically what I'm planning is I want to hedge the risk of the change in the fair value. You can say the fall in the fair value of this instrument which I'm going to acquire in the future. Second example could be hedging the exposure of changes in a debt investment. That means you already have a recognized investment in the form of a debt investments, and this debt investments you want to ensure that the changes in the fair value, again the fall in the fair value, you want to basically hedge that particular risk. Now there could also be certain examples where you would see that we could either use a fair value hedge or we could use a cash flow hedge. So one of the third examples which you can see relates to an example where the company could either choose to apply a fair value hedge or a cash flow hedge. That is, hedge of a foreign currency risk in a monetary asset or liability. So you know that a monetary asset or liability is always restated at a closing rate. So it could be relating to either the changes in the cash flow because of the change in exchange rate, or it might be because of the change rate, the fair value undergoing a change. Now the management needs to take a conscious call whether they want to hedge the risk related to the fair value or hedge the risk related to the cash flow. So this is as far as the fair value hedge is concerned and the examples associated with them. Similarly, when I'm looking in terms of a cash flow hedge, the entity wants to hedge the risk in terms of variability in terms of cash flows, which could mean in terms of cash inflows or in terms of cash outflows related to a recognized asset or a recognized liability or a highly probable forecast transaction. That means it's not a committed transaction, but there is all the chances of a particular sale or purchase which is going to happen in the future. Or it could be any component of any such item. Now, if you look at the examples in terms of the cash flow hedge, one is that there is a forward contract for inventory to hedge the exposure to cash flow resulting from the sale of inventory. So I want to basically ensure that the amount of cash inflow which I'm going to get from the sale of the inventory at a future date is hedged. So we enter into a forward contract to ensure that I get a fixed amount of cash inflows. Second example could be hedge of the foreign currency risk of a firm commitment. That means you already have a firm commitment and it is not yet recognized, but you want to basically hedge the foreign currency risk because due to exchange rate, the inflow or the outflow related to that firm commitment may increase or decrease. And the third example is the same example which I said, that the management needs to take a call whether they want to apply a fair value or a cash flow hedge. Now, you would also ask me that in an examination environment, are we supposed to take a call in terms of which kind of hedge accounting would apply? Do you apply a fair value hedge or a cash flow hedge? Well, I think it's one of a very tedious task if you ask me. It's not a very easy task to decide, what kind of hedge accounting would apply. So far, the examination system has been very safe because there has been no questions on hedge accounting. Quite recently, of course, in the RTP in May 21, they've introduced a small little question relating to cash flow hedge, and that also the question very clearly mentions that we have qualified that we're going to apply a cash flow hedge accounting. And finally, the third kind of qualifying hedge relationship is the hedge of a NIFO, where you want to basically hedge the exposure of the changes in the net monetary items in a foreign operation. The net investment in a foreign operation is nothing, but it is the net assets of that foreign operation, which would comprise of certain monetary items. And we've already said that due to Ind AS 21, the monetary items are exposed to changes in the change in the currency exchange rate, because these monetary items are translated using a closing rate on the balance sheet date. So monetary items are translated at a closing rate as per Ind AS 21, which exposes you to changes in the foreign exchange rates. So this is as per step number 4 is concerned. So what I'm going to do in the next video with you, I'm going to discuss the accounting, and I'm going to give you the journal entries which relates to a fair value hedge, a cash flow hedge, as well as a hedge of an NIFO. Basically what we're going to do, we are going to deal with what is the guidance given in terms of fair value hedge, look at a practical illustration. Then we're going to see a cash flow hedge, look at a practical illustration, and then a hedge of a NIFO. So that's what we have done in terms of step number 4. Thank you.